Google is up 15% in after-hours trading after the company reported massive Q1 results. The company also announced that it is going to start paying a quarterly dividend on top of a $70 billion share buyback program. There were also some very interesting comments in the conference call that we are going to discuss in this video. So as promised, in this video, we are going to cover everything you need to know about Google's Q1 report, why the stock is skyrocketing, and if the stock is still looking like a buy today. With that being said, let's get right into the video. All right, so let's get right into it with the highlights from the report. So the CEO here says, our results in the first quarter reflect strong performance from search, YouTube, and cloud. We are well underway with our Gemini era, and there's great momentum across the company. Our leadership in AI research and infrastructure and our global product footprint position us well for the next wave of AI innovation. We delivered revenues of $80.5 billion, up 15% year over year, and operating margin expansion. And then down below in this table, we can see that revenue grew 15% year over year, which blew away analyst expectations. And this is a very strong revenue growth rate for Google. Operating income also came in at $25.5 billion, which is an increase of 47% year over year. The operating margin also expanded by 7% to a net of 32%. So Google is becoming a much more efficient company, and they are executing on becoming more efficient, which is exactly what they said they were going to do. Net income came in at $23.7 billion, which is up 58% year over year, which is also earnings per share of $1.89. So right away, Google's revenue up 15%, operating income up 47%, and net income up over 50%. This was a very, very good quarter for Google. All right, moving on to the next screenshot. This shows the different business segments of Google and their growth rates year over year. So here we can see that Google Search produced revenue of $46 billion, which is up 15% year over year. YouTube ad revenue came in at $8 billion, which is up 21% year over year. And the Google network revenue did decline slightly by about 1% year over year. Overall, Google advertising came in at $61.7 billion, which is up 13% year over year. So these are pretty strong growth rates to overall Google Search and YouTube. Now, what's interesting about this is Google Search is growing strong and performing incredibly well. And in 2022, people were doubting Google's ability to continue maintaining their search dominance with the introduction of ChatGPT and overall artificial intelligence. However, since then, Google Search has done nothing but grow and incredibly well. So this is a clear indication of sentiment in 2022 versus the reality of Google's moat. And the company just continues to grow, which I love to see. Now we can also see here that Google subscriptions, platform, and devices revenue came in at $8.7 billion, which is up 17.5% year over year. We can also see that Google Cloud revenue came in at $9.6 billion, which is up 28.4% year over year. And this is one of the highlights for the quarter. The number of employees at Google also dropped by about 10,000 year over year. So Google is continuing the layoffs and their employee count does continue to drop, which I do think is a great thing for the company's overall efficiency. But just summarizing all of Google's different segments here, they're all growing very strong. And this quarter, they all saw growth of over 10% year over year. Now, moving on to the next screenshot, this shows that Google Cloud produced $900 million of operating income for the first quarter. And Google Cloud continues to grow its operating margin and produce more operating income for Google overall. This screenshot right here shows Google Cloud's operating income since the fourth quarter of 2019. And we can see that it has been consistently increasing. And now it is at an all-time high of $900 million of operating income. So Google Cloud's operating efficiency continues to expand and grow. And I do believe that this will continue over time because Microsoft's cloud and AWS operating margins are in the 30 and 40% range. And Google still has a very long way to go before it hits that because their operating margin is still around that 7 to 8% range. So over time, I do think that the operating margin for Google Cloud will continue to grow and continue adding more and more to Google's overall operating income. All right, moving on to arguably the biggest piece of news from the entire report. This is Google's dividend program. So Google is officially a dividend paying stock just like Meta. They just copied Meta's playbook and now Google is offering a dividend. So this says, Alphabet's board of directors today approved the initiation of a cash dividend program and declared a cash dividend of 20 cents per share that will be paid on June 17th, 2024. Now, this is an 80-cent per year dividend, which is about 0.4% on the company's current share price. So this is a very, very small dividend, okay? It is extremely insignificant. So I'm not really sure why Google declared such a small dividend, but it seems like the market responded well to this news. And I could see Google growing its overall dividend quite rapidly in the future, like 15 to 20% growth rates, if they continue to buy back a significant amount of shares and grow the company's overall profits and cash flows. But yeah, Google is now officially a dividend paying stock. So for you dividend investors, maybe it's worth taking a look at now. The company also announced a major stock repurchase program where this says, Alphabet's board of directors today authorized the company to repurchase up to an additional $70 billion worth of its Class A and Class C shares. So that's a $70 billion share buyback program on top of the 80-cent per share dividend now. And this is how the company is returning its cash flows back to shareholders. All right, moving on to Google's balance sheet now. There's not too much to talk about here, but I'd just like to point out how strong the balance sheet is. Google has total cash, cash equivalents, and marketable securities of $108 billion now. It also has current assets of $165.4 billion. Now, if we go down, we can see that the company's total liabilities is sitting at $114.5 billion. Now, to put this in perspective, again, the company has about $108 billion of cash on the balance sheet. So if Google wanted to, it could take its cash position and almost wipe out all of the company's debt and become a completely liability-free company. If it wanted to. I don't think that it is in Google's best interest to do that by any means, but that's just to put in perspective how strong this business's balance sheet is and how cash rich it is as well. But now let's move on to the cash flow statement, which is my favorite financial statement. And there is a couple of hidden things here that I want to point out. So first off, Google's stock-based compensation declined year over year. This is like the first time that I have seen Google's stock-based compensation actually go down year over year. And I think that this is a very good thing to see because the stock-based compensation over at Google is actually quite high. And this was one of the sticking points for investors over the past year or so. So it seems like Google is listening to the public and listening to its investors and slowing down its stock-based compensation and actually seeing it decline year over year. This could also be because Google laid off 10,000 employees year over year, which is about 8% of the overall workforce. So that is also another contributor probably to the lower stock-based compensation. But overall, as an investor, I do think that it is great to see Google's stock-based compensation finally starting to decline. Additionally, Google's net cash provided by operating activities came in at $28.8 billion versus $23.5 billion last year. So this is $5.3 billion more of operating cash flow that the company produced in the first quarter of 2024. This is also growth to the operating cash flow of 22.6% year over year, which is a very strong growth rate to the company's operating profits. However, if we do take a look at the purchases of property, plant, and equipment, which is also known as the capital expenditures, they almost doubled year over year to $12 billion in the first quarter. In the first quarter of 2023, Google had about $6.3 billion of capital expenditures. So again, it basically doubled year over year. What this also means is that Google's free cash flow year over year for the first quarter did end up declining. The company produced about $16.8 billion of free cash flow in the first quarter of 2024. And in the first quarter of 2023, they produced about $17.5 billion of free cash flow. So again, free cash flow did actually drop year over year due to Google's massively increased capital expenditures. So that is definitely something to point out and note for investors. Working our way down the cash flow statement, we can see that Google bought back about $15.7 billion worth of shares in the first quarter, which means that they utilized almost 100% of the company's free cash flow to buying back shares in the first quarter as well. So that is where the company's free cash flow is currently going, is directly to share buybacks. All right, now moving on to the conference call highlights. I just took some quick notes and I'm going to put them on my screen and go through them one by one. So Sundar said that YouTube and Google Cloud should exit 2024 with a run rate of $100 billion in annual revenue. Currently, these two businesses, as of the first quarter, are at a run rate of around $75 billion in revenue. So Google is expecting its cloud and YouTube businesses to grow quite significantly in the year of 2024. And by the end of 2024, these two businesses combined should be doing $25 billion of revenue for the fourth quarter. So that's massive growth that Google is expecting. Google also says that they have the best infrastructure for AI, and they strongly believe that. They have high conviction that they are the #1 AI infrastructure business. Google is also continuing to use more of its own custom-made GPUs, and they are continuing to see their GPUs increase in performance. Now, the reason that I find this interesting is because Google, Meta, Microsoft, Apple, and Amazon are all building their own GPUs now. So I think that over time, they are going to continue using their own custom-made GPUs over NVIDIA GPUs. So it's going to be interesting to see the demand for NVIDIA GPUs over the longer term, and if they can maintain their ridiculously high margins that the company is currently producing. Because again, all of these companies are investing in building their own GPUs and kind of moving away from using NVIDIA GPUs. So we're going to have to see how that plays out over time. Then Google says that it is using generative AI to improve Google search, and they are seeing an increase to search usage. So again, back in 2022, people were saying that chatbots such as ChatGPT were going to completely disrupt Google search. However, when you take a look at the actual data and the numbers, Google search has not lost any market share over the past couple of years since chatbots came out, and more people are using Google search, and Google search's revenue is actually continuing to grow at 15% year over year. So it seems like Google search's moat has not been crossed, and overall Google search is actually improving, and its usage is improving as well. Then Google says that it has 6 products with more than 2 billion monthly active users now, which is incredible. It also has 15 products with more than 500 million monthly active users. So Google's overall network is massive, and they are using all of this data to improve their own AI and improve the productivity, efficiency, and overall usability of their AI. So they have this massive data moat that they are building their AI infrastructure on. Google also said that 90% of generative AI unicorn startups are on Google Cloud. So 90% of the generative AI businesses or startups that hit $1 billion in overall worth are on Google Cloud. So these AI businesses are choosing Google Cloud as their cloud provider. YouTube Premium subscriptions are also over 100 million now, and Waymo, which is Google's autonomous driving unit, is offering paid rides in Los Angeles now, and they are going to be expanding paid rides to San Francisco and a couple of other cities around the US. This is also interesting to me because Waymo is a completely autonomous driving vehicle. There is no driver inside of the vehicle. And this actually suggests that Waymo is ahead of Tesla for autonomous driving. However, I don't hear a lot of people talking about this. And in my own Patreon community, someone the other day asked me what Waymo even is. So Waymo doesn't seem to be as known about or as widespread as Tesla. However, it is seeming like Waymo has the better autonomous driving technology, and again is actually ahead of Tesla for autonomous vehicles. Then Google said that subscription growth is significant and it is remaining strong. This is in overall YouTube Premium and Google One subscriptions. And then finally, the CFO said that CapEx will remain at or above the Q1 level, which is at least $48 billion of capital expenditures for the year of 2024. This is by far the most capital expenditures that Google has had in its history, okay? So Google is spending a record amount of money on capital expenditures in 2024. And overall, this probably means that free cash flow will be down for the year of 2024. Just like how we saw free cash flow was down year over year for the first quarter due to those large capital expenditures. Again, I think that this is probably going to remain the case for the remainder of the year. So when we start to talk about Google's valuation here in a minute, I am actually not going to be using the free cash flow metrics because the company is in this massive CapEx cycle. So I think that focusing on operating cash flow or operating income is the wiser choice for Google right now. So with that being said, let's now talk about Google's valuation. So the company in the trailing 12 months now has produced about $106 billion in operating cash flow. At the market close, Google's market cap was also $1.99 trillion. So we have to multiply this by 1.127, which does factor in the 12.74% growth to the share price in after hours trading. This means that Google's market cap in after hours trading now is $2.243 trillion. Now what we can do is divide this by the $106 billion of operating cash flow that Google produced in the trailing 12 months, which gives us a price to operating cash flow of roughly 21 right now. So keep that number in your brain really quickly here, okay? Because first we are going to enter back in at the $2.243 trillion market cap of Google in after hours trading. And the company also produced $96.8 billion of operating income in the trailing 12 months now. This means that Google is trading for 23 times operating income. So Google is trading for 23 times operating income and 21 times operating cash flow. Now, what I like to do is take a look at the 10-year average historical price ratios and compare them to how the company is currently trading. So Google's 10-year average price to operating income is 24.2. So in terms of operating income, Google is actually trading still below its 10-year historical average in after hours trading. However, Google's 10-year historical average price to operating cash flow is 17.7. Now, personally, I prefer to use the operating cash flow metric, and this means that Google is trading about 20% above its 10-year average historical average price to operating cash flow metric. I really hope I just said that right and you guys know what I mean. So if you're taking a look at Google's operating cash flow, then it's actually not really on the cheap end today, and it is actually on the higher end of where this business usually likes to trade. And I don't find that very surprising because the stock is up massively from its lows in 2022, and it is up another 12% in after hours trading now. So the market seems very happy with Google overall, and investors seem excited about the company today. However, in my opinion, the time to get the best deals in the market is not when investors are excited about the stock and its overall results. The best time to get the best deals is when investors are pessimistic against the company and they don't really want to own it. And again, that was in November of 2022 when Google was trading for a 10-year low price ratio. So now that investors are clearly excited about the stock, I'm actually not going to be adding more of it to my portfolio, but I'm not going to be selling it because I do think that Google is executing extremely well, and they are executing on what they told investors they were going to do with increasing the company's overall efficiencies. Every relevant business segment of Google is also growing at over 10% annual growth rates right now and beating analysts' expectations and my own expectations. So I don't want to let go of this business because I do think that over the long term, it is going to be a massively successful business and a much larger business than it is today. However, again, with that being said, I am not looking to add more Google shares to my position today because I do think that the stock is on the more expensive end. But this was a great quarter for Google. I think that they knocked it out of the park. I think that Sundar is actually doing a pretty good job. And overall, the business is just continuing to execute and grow extremely well. And with that being said, that is going to wrap up the video for today, everyone. And if you did enjoy this video, then please remember to leave a like on it. And if you want to see more stock market related content like this, then please consider subscribing to my channel as well. Also, if you made it to the end of the video, then thank you so much for tuning in. I truly do appreciate it. And I really hope to see you all again in my next video.